Kawedia joins us, Group Chief Financial Officer with IRB Infrastructure joins us. Now, Tushar, good morning. Thank you for joining us. The company has received 300 crore out of claim payment towards an arbitration award. When do you expect to receive it, and how soon you will be able to work on it?
We have already received the amount that is around 300 crores plus. That is 75% of the total amount of one of the project, that is Pathankot Amritsar. The amount is already received by the company.
Are there any other such pending claims?
So we have a couple of claims wherein we will be receiving the funds in a piecemeal manner over next 1 or 2 years now. There is one project wherein we have been awarded the similar kind of award has been received in the Panji Goa project. The proportionate 75% amount is already received. We are awaiting the balance 25%, which is expected very soon.
IRB toll collections, and especially if you want to understand the way economic and the traffic is moving, your toll collections are always an indicator of that. So what has been the trend like in the month of May and June?
So if you see, in last couple of months, we have seen a good uptick in the commercial as well as tourist traffic. We have seen like post that third wave, which was slight impacted in the month of January, which affected our passenger car vehicles are hardly 1 or 2%. But thereafter, because there were a lot of relaxations and there are no more restrictions on the movement of traffic, we have seen a good uptake in both the segment, that is commercial and the passenger cars vehicle. And for this year, the main advantage what we have is the tariff hike, which is almost 10% for our projects, which is on the backdrop of higher WPI for the last year. So this is also supporting the good improvement in the overall toll collections for the company.
Outside of toll collections, just wanted to understand what's happening with raw material price inflation, your construction costs. Has that impacted your BOT projects for the, say last 2 years? Because I'm guessing you would expect some pressure on margins as well on account of that.
So initially, if you see in fourth quarter of the last year, we have seen some impact due to higher pricing on the major material like steel and bitumen. However, what we are seeing today is the prices are coming down back, they are down by at least 20-25% in last last 1 month. So with that count, what we see is the impact on margins will would get nullified post this pricing are coming back to their levels in say next 2-3 quarters. So that way it's a cycle. What we have seen is fourth quarter was slightly impacted due to this. However, due to this reduction in prices, we may see our margins coming back to the same level in coming quarters.
Tushar, also wanted to understand the total order book of the company now stands at 16,000 crore rupees, out of which 10,000, as we understand, pertains to EPC. What is the guidance that you could give us for orders going forward into the fiscal, and which segment in particular is showing good traction?
Yeah. So yes, our order book is now very robust with 16,000 crores of order book, and to be executed, out of which 10,500 crore is towards EPC to be executed in next 2 to 3 years. Whereas the other 6,000 crores is to be executed in say 7 to 8 years, that is towards the O&M. On the new order book, what we are seeing, there is a lot of pipeline available from the NHAI side in this fiscal, and similarly what we expect is our order book should at least on a EPC front see at least 30 to 40% kind of upside in this particular fiscals on the backdrop of the orders available from the NHAI side on both BOT, TOT and HAMS segment.
Also, recent media reports have been suggesting that more infrastructure sops will be given out by the government, and that expenditure is expected to even touch 7.5 lakh crore rupees in the fiscal. What kind of growth and revenue potential then you think is coming your way, say in the next 2 to 3 years? Because you've already given a growth guidance of what I understand 14 to 15% for the full fiscal.
Yeah, so as we see that basis the existing order book, we may see at least 18 to 20% revenue jump on the construction front this year. So similar kind of movement we will see once the announcements are coming from the government side on the new order book, and at least 18 to 20% of construction revenue growth we are presuming year on year growth on the backdrop of the pipeline available from government side.
Recently, also, Tushar, there was a financial closure of the Meerut as well as Budwan Express part of the Ganga Expressway. What is the overall progress now on the Ganga Expressway?
So if you see, we have achieved financial closure for all of our projects which were awarded in last one year. And for the Ganga, we have recently got the financial closure done. We are just awaiting the appointed date from the authority side. We have already commenced the work on all the other projects where the appointed date is already received, and we are fully geared to have our construction execution happening in the coming quarters for all these projects.
If interest rates they go higher, will your toll rates also go higher because they are linked to inflation? How is that maths working?
Yeah, so that's what, if you see this year itself, we have seen a 10% kind of tariff hike for the toll road projects, the fully operational toll road projects. That is again on the backdrop of the higher WPI for the last year. So if the WPI is continuing at at a higher number, we may see a tariff hike, similar impact on the tariff hike for the next year as well.
Good to have you on the show. We'll let you go on that note. We're going to take a very quick break. News that markets are holding out okay.